This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Raymond Luk, CEO and founder of Hockeystick. Hockeystick connects startups with founders. Startups who need capital and connections to grow fast. Hockeystick makes the process easier, faster, and more intelligent by using data to drive connections. Raymond, thank you for joining us.
Pleasure to be here.
Great. So tell us about your background before starting Hockeystick.
Yeah, I've been a serial entrepreneur for over 20 years. So started my first startup out of college, and I've gone on to run and operate a bunch of different companies. I've been an angel investor. I started and ran a successful venture capital fund, and now I'm running Hockeystick. And I think that, somewhat being on both sides of that investment table, startups trying to raise money, and then as an investor trying to deploy capital, it kind of gave me a lot of insights that I've been applying to this day on Hockeystick.
Great. So what led you to start working in the startup space?
Yeah, I mean, it's really simple. If any entrepreneur, in fact, not even a startup founder, but any business entrepreneur knows that it's very difficult to raise money for their business. And that's whether you're raising angel money, venture capital, loans, any other kind, even finding customers, it's hard. But I think specifically to fundraising, we just thought, and I think that the process is quite broken because it seems to be designed more for the funders than the founders. So an example of that is, every funder has a different process, different intake, different set of criteria. And so, which is fine, I was a VC, so I had exactly the same thing. But we really require our founders now to learn everything about us. And they didn't start their company to learn how to fundraise, hopefully not. So it's almost like the better you get at gaming the system, the worse you are at running your business. So we're trying to solve that problem of making it easier for great founders to get access to capital without jumping through all those hoops.
Great. So what's your advice for people investing in startups? What do you tell them to do before they write that check?
No, I'll answer that in two ways, because we are a startup, and we're also a startup who helps funders, find essentially we're like a matchmaking platform, right, between funders and startups. So I think from if you're investing in startups, especially if you're an early stage investor, be prepared for the long term. I think I still believe that people don't realize that it takes 10, 12 years on average to get an exit out of an early stage company. It's one of the reasons why it's so difficult to make money as an early stage investor, even though I want more people to do it. So I think the first thing is be aware that it takes a long time. Especially for great companies. And, as an angel, I've been in deals for 10 years. And then I was lucky enough that they did an IPO, but there were many opportunities along that journey for me to say, how's it going? How come you're not growing faster? How come your competitor raised more money than you? And we have this kind of artificial timeline in our head that things should go quickly, but that's only true for early exits. So, if you want to exit in 3 years, that's a very different outcome you're going to have. So I think number one is as an investor is be patient. Easier said than done, of course. We're all in a hurry. I think for the startups, it's a slightly different issue. I mean, yes, you have to be patient as well, but going kind of riffing off of what you said about your advice for funders. My advice for startups also if you're an early stage startup, you have to build relationships with people. That's partly why Hockeystick exists, is to help bridge that gap. But I think a lot of entrepreneurs, they'll pitch somebody, they'll say no, and then that's the end of it. But no doesn't mean, it can mean later. Come talk to us later. Sometimes it doesn't mean that, by the way, but sometimes it does. And I think building up a network, a long-term network on LinkedIn or something like that, is a skill that most entrepreneurs have this skill, but it's something that we really believe in.
Great. So let's talk about the state of startup investing. How do you see the industry evolving from here? Where do you see it going?
Well, one really interesting thing, although it was, for society, it was not such a good thing, was that the impact of COVID on travel, on tech events, I think it's been very disruptive for venture capital in particular, because pre-COVID, most people, if you ask most VCs or angels, they would not invest outside of their home city or home region. And if you would have taken a poll in like February 2020 and asked 100 VCs, would you invest in a company where you've never met the founders in person? The answer would be, the majority would have said no. If you do that same poll today, 100% would say yes, and probably 80% would say, I've already done that deal many times. So one big trend that the pandemic has forced upon us, which I believe is a positive legacy, is the digitization of investor connections and meetings means that people are more open-minded. They're making more cross-border investments, cross state lines. They're meeting entrepreneurs of different types, not just the ones that happen to be, in your personal network or in the same clubs as you. And I think that has really, it definitely has resulted in more velocity of capital being deployed, and that's a positive thing.
Great. And what do you see as the growth rate of startups today? How fast do you see it currently growing here post-pandemic?
I think that we were scared when the pandemic started. We're not finished it, unfortunately, but we were definitely scared that the amount of capital being deployed would really dry up. And there was, I think, maybe a quarter and a half where that was true. There was a lot of uncertainty. Deals were not closing that had not been started pre-pandemic. But going back to what I was saying before, that's really changed. So if you look across, globally, but especially North America and Canada and the United States, the venture dollars, everyone knows has gone up. Valuations has gone up. It's very frothy. So I see that as, number one, a really good news story for, we have not, again, as a business community, we haven't let all of these crazy restrictions on our travel and congregating together that we want to do. We haven't let that stop us doing business. In fact, it's probably gotten easier to do this over Zoom. I mean, that's a good thing. I think that and then overall, in terms of valuations and amount of capital and the growth in late stage deals and SPACs and all kinds of things, I don't know if this is the top of the market or a bubble, but it's certainly, if you're a startup raising capital and you're a good startup, there's really no reason you can't get the capital you need. And I've been through a bunch of different cycles where that wasn't always the case. So I think there's a lot of growth right now in startup investing in general.
Great. Well, you talked about some of the challenges startups face in this space. What are the challenges on the investor side you think they face in making investments in the early stage?
Yeah, I think in some ways, the venture capital market, and I kind of say venture capital, but I think it kind of somewhat overlaps with like seed funds and angel funds and things like that. It is also being disrupted. There is competition. There's more private equity funds competing with venture, particularly in deals where, let's say it's a later stage company with predictable revenues and metrics that looks a lot more like a traditional PE deal than a venture deal. So I think there's more competition. There's competition for people acquiring companies earlier, the early exits. There's platforms like Hockeystick, but there's other platforms as well that are trying to maybe pool capital, like angel syndicates. Equity crowdfunding hasn't really taken off, but I think the potential is still there. So I think there's some more options, even if, at a higher level, there's more debt options. So there's more like SaaS funding, Clearco. There's a lot more private lenders out there as well who are jumping in on this bandwagon. Even the venture debt market has really come back. So I think that there's a there's a lot of interesting trends that are somewhat competitive to the traditional venture capital market, which for the entrepreneur is a great thing, right? I think it's a great thing for everybody, but for entrepreneurs especially, I never complain about having more capital and more options.
Great. So tell us more about Hockey Stick. How do you fit in the overall landscape here with other tools that are in the early stage world?
Hockey Stick really, we exist to help companies get easier access to capital. So we do three kind of main things. One is we help companies raise venture capital. Another one is we help them get loans, and the other ones we help them get government grants, because those typically are the three. Leaving exits aside, if somebody wants to buy your company, that's another financing event. But loans, grants, venture are the main sources of early stage funding pretty much anywhere in the world. So Hockey Stick exists to make that really easy. And probably the things that we do quite differently than other people is that, number one is when you join Hockey Stick, we really are optimizing for the founder's time. So we don't want you to waste time. We don't, we're not encouraging you to reach out to 1,000 different investors hoping one will say yes. So we've really optimized our platform and our advice that we give people on. Let's really get to know you. Let's connect you with exactly the right people. And hopefully that's only 3 connections. And hopefully one of those 3 leads to a term sheet or leads to funding. So we kind of describe it as like fundraising as a service, like FAS. It's not really a good acronym, but where you join one platform. And then as you grow, let's say from pre-revenue to revenue, obviously different investors, loans, grants will be available to you. We'll automatically figure that out, automatically go help you get that. So it's turning fundraising into an outsourced service is something quite new, allows us to use data, technology, our relationships, matchmaking. But one other thing we do that not everyone knows about is we actually play kind of an educational role. Especially in tech startups, whether you're raising your first seed round or you're raising $25 million, a Series A or Series B. I wrote a book on pitch decks called Pitching a Leap of Faith. And it's based on having worked with lots and lots of entrepreneurs and analyzed thousands of pitch decks. I created a framework that's designed to help entrepreneurs tell their story in the most effective way that also kind of helps eliminate a lot of the confusion that entrepreneurs have when they're getting pitch deck feedback from VCs. Because a VC's job is not to help you improve your pitch deck, right? Your VC's job is to filter you and decide, is this a deal I want to do? But on the way out the door, they're going to give you a bunch of pitch deck feedback. And usually it's very confusing. It's kind of arbitrary. It's because usually it's a way of saying no, but I don't want to just say no to your face. So Pitching a Leap of Faith, there's a book and also a course. It's offered free for all of our users. And it's really helped move the needle for a lot of entrepreneurs to somewhat tune out the noise that they're getting when they're pitching and help them tell their best story. And it's something that we kind of did as for fun. I like to write. I'm a student of business, so I enjoy that. But we've had fantastic feedback from people that said it's very different than other resources out there.
Great. And what type of startups are the most successful with the Hockey Stick solution?
Yeah, for us, it's from, early, like really early stage, 2 people and an idea up to, I'd say, just beyond the Series A. That's our sweet spot right now. We don't limit ourselves to that, and we don't limit ourselves to only tech startups. But I think it's our sweet spot because if you think about it, the needs for capital are extreme at that point, because if you don't have any capital, you just die, right? You don't have like a backup rainy day fund. But also you have a very small number of people. So if you have 2 founders, 3 founders, or a 5-person company, you can have 60% of your team being experts at fundraising. So it's that kind of sweet spot, that collision of a lot of need for capital, not a lot of resources, and frankly, as an investor, you would want the companies in your portfolio to be experts at sales, product marketing, product management, maybe engineering, hiring, but fundraising is not something that you want them to be experts at. So I think that's kind of a unique niche that we fill at Hockey Stick.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah, I think that one of the great things about my job is that I spend a lot of time with founders. So I'm always asking them about their stories. And going back to what I said a little bit earlier, one of the things that's really fascinating is that every entrepreneur has a different journey and a different story, right? Whether they come from a wealthier background, a less wealthy background, whether they live in Silicon Valley or Austin or Toronto or other places. So there's a lot more diversity in founders than we think, and that creates a lot of opportunity. I think it's been overlooked, right? There's a lot of types of businesses that have been underfunded, types of founders, female founders, just as one example. So one of the really gratifying and fascinating things about running a platform and having all this data is you can start to see what works, what doesn't. And, I think we expected when we started that we would just kind of mirror offline. So, you join Hockeystick and we'll kind of mirror offline processes, help you get access to the right people. What we found is that because we're digital only, we have like Japanese investors connecting with, startups in a small town somewhere, not in Silicon Valley or not in Toronto Waterloo corridor. And for them, they're indifferent now because it's all digital. So there's some really interesting trends there that I think we'll only see the impact of this maybe years and years later. But, I think a lot more great companies are getting funded through platforms like Hockeystick. I think that's I'm an optimistic person. That's why I am an entrepreneur. And I think that I love seeing that. I love seeing that there's more. Like there's this great saying from Larry Wall, the founder of the Perl programming language, which nobody probably knows but me, very few people. But his mantra is always there's more than one way to do it. And I think that's something that that kind of diversity of opinions is really innovation. So we see that a lot in our data. And again, super pumped about what 2022 is going to be like.
Great. So how best for listeners to get back in touch with you?
Yeah, I'm pretty easy to reach on LinkedIn. You can just look up Raymond Luk, Luk, spelled Luk on LinkedIn. Also, if people are interested in signing up, hockeystick.co, if you want access to the book, the course, it's free for startups to sign up. So that's a really easy way to get access to me and my team. If you're an investor, LinkedIn is the best way. And I'd love to hear from people.
Great. Well, we'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Looking forward to that. Thanks.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.